This is Scott Becker with the Becker Private Equity and Business Minute podcast. The big story today is stocks getting hammered on higher than expected inflation news. And this is a story, it seems to be the continuous up and down in the stock market based on inflation readings and what the Fed's reaction will be to those inflation readings. Here, the concern is that these inflation readings will cause the Fed to stay very hawkish. The Fed has done a great job over the last year in bringing inflation down some. They've brought it down from about 8.5%, 9% to 6.5%. But at the end of the day, it's nowhere near the target they really want, which is 2 to 3%. Increasingly, you're finding that the Fed can only go so far with this without really hurting the rest of the economy. And they seem to be in some ways, again, the story today is stocks being driven down by inflation being up and concerns the Fed will be more hawkish. The larger story is at some point people will come to realize the Fed can only go so far in raising rates without really harming the economy, and they can only fight inflation so much unless the federal government also cooperates with them in trying to reduce spending. But right now you've got two sides of the government seemingly at odds with each other. The federal government spending money is leading to growth and inflation, the Fed raising rates to try and fight inflation. Really a fascinating situation. Again, stocks clobbered today. The indexes are nearly down 1.5% to 2%. We'll see if that lasts. And more concerned that the Fed will raise rates at the March 20th, 21st meeting. Thank you for listening to the Becker Private Equity and Business Minute podcast.